Coming up on today's show, you know what massive increases to inflation are going to mean? Yeah, that's right. Massive increases to Social Security payments. We're going to talk about that, plus a complete rundown of stocks, cryptos, industry sectors, and the ETFs tracking them. Stick around. I'm DeLegge with ETFguide TV. Thank you so much for joining me. I've got a few charts that I want to share with you on today's program about the latest trends in stocks and cryptos. Also, we'll take a look at industry sector ETFs, plus market sentiment. We'll see what investors think about the current market conditions. And then I'll also take a look at Social Security, because we've been hearing a lot about inflation and how it's been increasing. So I want to take a look at what impact that means on Social Security payments. So if you're at, near, or already in retirement, pay special attention to that particular part. Plus, on today's program, I want to mention one other thing. I've got a huge announcement that I want to make for those of you that have not gotten the news. I'm going to make that announcement a little bit later about ETFguide TV. I'm really excited about this. If you're here for the first time, by the way, be sure to hit that subscribe button to ETFguide TV. Never miss any of our weekly episodes, including our originals like ETF Battles, as well as the Portfolio Report Card. Also, check out my viewer resources section in the description section below. I've got online classes. I've got free ebooks. I've also got a portfolio grading service. And I encourage you to take full advantage of all these wonderful tools. I want you to achieve your financial dreams. I want you to have the security that you deserve, as well as to help you improve your investment results. So, without further ado, let's take a look at our first chart. And this one takes a look at our big picture view of the major asset classes and the ETFs tracking them. And I like to give you that big picture perspective. This is it. And if this is, by the way, a year-to-date chart, that means it's since the start of 2021 through the market close of July 23rd. You'll see that commodities, ticker symbol USCI, and global real estate, both neck and neck. That's REET for global real estate. They both have sizzling performance with year-to-date gains sitting somewhere between 22 to 23%. U.S. bonds are flat by comparison, and U.S. stocks have been pretty strong performers. They're ahead by almost 18%. If we dissect the broader stock market and take a look at it by industry sector, you'll notice a couple of important trends. First, energy stocks, XLE, and real estate, XLRE, and communication services, XLC. These are the ticker symbols of the ETFs tracking these specific sectors within the S&P 500. And these are the three top S&P 500 industry sectors in terms of performance thus far in 2021. Now, some of those leveraged ETFs tied to these same groups have done even better. We've got a pair of leveraged direction ETFs that I've been watching, ticker symbol ERX, which has 2x daily exposure to energy stocks. That one's up 60% year to date. And then ticker symbol DRN, that's David Ronald Nancy, which is a 3x real estate ETF. That's daily exposure, 3x leverage, and that one has an impressive 91% gain since the start of 2021. One more point that I'll mention about this particular table that you're looking at, you'll notice all 11 S&P 500 industry groups are positive in 2021, and that signifies really broad participation by all industry sectors in the uptrend. And so if you're a bull, really, it's the best possible scenario. And of course, if you're a bear, well, markets can certainly change on the dime, and eventually they will. But right now, the trend remains up. Despite the strong performance in stocks, it's confounding to me why we have the CNN Fear and Greed Index still at a fearful reading of 34. I mean, what the heck is going on? Now, the number 100 represents extreme greed, while 0 represents extreme fear. Again, it's puzzling to me why there's so much stock market fear when we got prices that are still trading at near-time highs. I mean, what's going on? Usually you don't see fearful readings like we have right now when stocks are still trading at or so close to near all-time highs. So I guess what you could say is this particular reading at this particular juncture is an anomaly, it's a discrepancy, or maybe it just means the investing public is emotionally challenged and completely confused about their feelings on the stock market. Who knows? Now, if you're looking for froth in the stock market, well, here's a place that you can keep your eyes on. That's the IPO and the SPAC market, which has already blown past 2014, which is a record year in terms of capital raised. Now, so far in 2021, a total of $214 billion in IPO capital has been raised by IPOs. These are initial public offerings. And if we combine SPACs with traditional IPOs, you got 582 companies. Again, that's a record number. And we're not even over with 2021. So these numbers are going to go higher. And by the way, that number 582 combines SPACs along with IPOs. But you'll notice that there's massive money grab happening right now in the IPO and the SPAC marketplace with a lot of speculative companies coming to market. You got these venture funded entities, you got these angel funded entities, all trying to cash in on the craze. So be very careful. A lot of these companies are, again, speculative. And in previous eras, a lot of them wouldn't even be ready to go public just because they're basically like venture capital companies. They haven't fully matured yet. And so remember, the proper context, if you're going to invest in IPOs and SPACs, is to do it within your non-core investment portfolio, which is much smaller in size compared to your core portfolio. It's also much smaller in size compared to your margin of safety bucket, especially those of us that are near or at or already in retirement. Your margin of safety is always much larger compared to your non-core portfolio. So that's context. If you want to learn more about that framework that I teach about how to have a rigorous, robust, and architecturally sound portfolio construction, you can check out my online classes below in the description section and be educated about that and learn how to implement that in your own strategy. Now let's take a look at another interesting chart. Everyone wants to know what the future stocks or what future stock returns are going to be. Well, what happens when the stock market has so many households with so many exposure or so much exposure to stocks that we're at hitting historically high levels in terms of household exposure to stocks? Well, this chart shows us the answer. You can see when household exposure gets above 54% as it is right now, that forward rolling 10-year S&P 500 returns have averaged a paltry 4.1%. Now, that's still a lot better than keeping your money in a short-term savings account at the bank. But on the other hand, it's not as good as previous cycles when household exposure to stocks was down or in the doldrums. You'll see that S&P 500 returns historically have been much higher than this 4.1% figure. So what we know about the future is that it's never like the past, but sometimes it rhymes. So again, those of us that have enjoyed all these wonderful returns in stocks, and we've appreciated along with stocks, our asset values have gone up, but at the same time, do not count your chickens before they hatch. Here's a chart for you crypto maniacs. The Diversified Bitwise Crypto Index Fund, that's BITW, down 34% since the start of 2021, and a Bitcoin Trust has fallen just over 15%, that's GBTC. Cryptos are still in correction mode, and nevertheless, we still see the Ethereum Trust, that's ETHE, bucking the trend and still hanging on to a pretty nice 19% year-to-date gain. Nevertheless, not as good as where it was previously in 2021. I mean, this ETF or trust was up around 160%, and now it's up just 19% and change. So pretty volatile returns in cryptos right now, but nevertheless, that's the nature of the market. The market is still maturing, and the multi-year trend in cryptos, despite the correction that we're seeing right now, remains up. How many of our viewers, and this is an audience question, are at, near, or already at Social Security full retirement age, or let's just say within striking distance of Social Security. The earliest that you could collect it is at age 62. Now let's talk about Social Security and some major increases for recipients that are coming because of higher inflation. We've been hearing about this on the news, and the 5.4% increase that we saw in the June CPI, that's an acronym for Consumer Price Index, that was the largest year-over-year increase since 2008. And according to some projections, Social Security benefits could increase by a whopping 6.1% next year. That's a 5x gain compared to the 1.4% increase we saw this year. So take that, Bitcoin and Ethereum, a 5x gain to your Social Security payments. Amazing. Now, the official cost of living adjustment, also known as COLA, not Coca-Cola, this is just COLA, is going to be announced this October, and it's based on the year-over-year increase in the average CPI from quarter 3 2021 to quarter 3 2020. So stay tuned. We are going to see big increases to your Social Security check that are probably coming. And now, for some big news, I am pleased to announce a brand new monthly video and podcast series that I'm doing called First Look ETF with the New York Stock Exchange. This is something I've been quietly working on for a while. I'm producing the show, and the first episode will be dropped and released on this channel, ETFguide TV, coming this Monday. So stay tuned. Do not miss it. It's going to be epic, and the program's going to be hosted by Stephanie Stanton. She's an ETF reporter at ETF Guide. You'll get a chance to meet her, and you are absolutely going to love her. I love her. She's fantastic, and she's also a lot better looking than me. And again, the First Look ETF program is going to be like no other show that you've ever seen, because it's going to be focused on newly launched ETFs and all of the innovation along with the new investment opportunities that it's creating for people just like you and me. So I'm very excited about this new program that's coming along. And again, that is a monthly show. It will be published here at ETF Guide TV. So we're doing a lot of things to try to keep you plugged in to the ever-growing ETF marketplace and just all the opportunities that are at hand to help you get ahead. So if you've enjoyed today's program, be sure to subscribe to ETF Guide TV. Hit the comment section below and the like button. Don't forget to check out the links below in the description section. I offer online classes. I also have a portfolio grading service. I've got free ebooks, and I look forward to seeing you next time. I'm Ron DeLegge with ETF Guide TV. Be safe, be healthy, invest wisely, and guess what? The profits will come. We'll see you next time.